welcome to Shall We Consider? I'm your host, Dave. Today we're going to talk about central bank digital currency. CBD?
Marijuana, the burning weed with its roots in hell.
No, not that one. CBDC. Let's start off with some terms. What is the central bank? Central bank, a financial institution given privileged control over the production and distribution of money and credit for a nation or a group of nations. What is the Federal Reserve? The Federal Reserve has three main responsibilities. It conducts the nation's monetary policy to promote maximum employment, stable prices, and moderate long-term interest rates in the U.S. economy. It supervises and regulates banks and other important financial institutions, protect the consumers, the financial system, and the economy. It provides financial services to the U.S. government, U.S. financial institutions, and foreign official institutions, including serving as a banker's bank. What really is central bank digital currency? What is a central bank digital currency? A CBDC is a digital form of central bank money that is widely available to the general public. Central bank money refers to money that is a liability of the central bank. In the United States, there are currently two types of central bank money: physical currency, issued by the Federal Reserve, and digital balances held by commercial banks at the Federal Reserve. While Americans have long held money predominantly in digital form, for example in bank accounts, payment apps, or through online transactions, a CBDC would differ from existing digital money available to the general public because a CBDC would be a liability of the Federal Reserve and not of a commercial bank. What caused all this excitement?
I think the two worst reasons for why this is on the table. One is this general fear of China's doing it, so the United States has to respond. And that has so many problems with it just from the start. The second, I actually think is worse though, because it's this fear about Libra or DM and Facebook or Meta, where I encourage you all, you don't have to take my word for this, go on Google Trends and just look up CBDC and see what the activity has been like. And you're gonna notice that right after the summer of 2019, the views and the trend activity just skyrocket with activity. And it's really important to be clear here. What happened? Did Facebook introduce a stable coin? Did it put one on the market? Did it integrate it into Facebook on social media? No, it published a white paper talking about the idea. And this got officials, both in central banks and international agencies, and ones in Congress, so scared about what might happen if Facebook goes through with it, that suddenly, I mean, CBDCs were not new at the time. If I'm not mistaken, China had been looking at it since about 2014, if not earlier. And yet suddenly it changed the game for them that this might be a real thing. And unfortunately, despite so many people being concerned about it, despite it really not offering a solution to the table, despite any of the many promises that have been offered just failing to stand up to scrutiny, I think those two reasons have really held strong.
China shouldn't really be a surprise, but it is interesting that Facebook's failed Libra coin projects caused such a commotion. There's a lot of buzzwords surrounding CBDCs. Here are a few. Privacy. CBDCs raise privacy concerns because central banks would have access to detailed information about all CBDC transactions. programmable digital currency would include conditional payments, targeted distribution, expiring funds, and automated workflows. Financial inclusion. CBDCs could help to improve financial inclusion by making it easier for people to access financial services. This is because CBDCs do not require a bank account, and they can be used to make payments even if the recipient does not have a bank account. Cryptocurrency. CBDCs are similar to cryptocurrencies in that they are digital currencies that are not backed by physical assets. However, CBDCs are issued and regulated by central banks, while cryptocurrencies are typically decentralized. Blockchain. CBDCs could be implemented using blockchain technology, which would allow for secure and transparent transactions. Interoperability. CBDCs need to be interoperable with existing payment systems in order to be widely accepted and used. This means that CBDCs transactions should be able to be processed by existing payment processors and banks. The BIS, the Bank for International Settlements. It's an international financial institution that serves as a bank for central banks. It was established in 1930 by an agreement between Germany, Belgium, France, the United Kingdom, Italy, Japan, the United States, and Switzerland. Here is their general manager, Augustin Carstens, talking about CBDCs.
We tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that.
I think what we can gather from that video is control. What about the European Union? Are they on board? Well, Christine Lagarde is the president of the European Central Bank.
The decision will definitely be made to launch the CBDC and to make it a reality. We can't go wrong with that project. I'm confident that we will move ahead, but that's going to be a decision of the Governing Council. I think it's an imperative to respond to what the Europeans expect, and I think we have to be a little bit ahead of the curve if we can on that front. So if we can accelerate the work, I hope we can accelerate the work. I will certainly support that. And I was delighted to see that in the United States, there was an executive order by President Biden to actually expect similar effort and focus and progress on CBDCs, cryptos. And I think that it will take all the goodwill of those who want to support sovereignty, who want to make sure that monetary policy can be transmitted properly using our currency will endeavor. On the issue of financial stability, I totally concur with my Vice President, De Guindos, but I will also point you to the last sentence in the first paragraph of our monetary policy statement. And I know that there's been an abuse of that, but we mean it. We will take whatever action is needed to fulfill the ECB's mandate to pursue price stability and to safeguard financial stability. So, have no doubt.
Okay, let's make our way back across the pond to the good old US of A. And our chairman of the U.S. Federal Reserve, Jerome Powell.
I do want to stress we have not decided to do it, but we do understand our obligation is to really get to to the bottom and understand both the technical and the policy issues that need to be answered.
And then we have Tom Emmer, U.S. House of Representatives. He weighs in on what he thinks about central bank digital currency.
I reintroduced a bill yesterday called the Central Bank Digital Currency Anti-Surveillance State Act, which puts a check on unelected bureaucrats and ensures that the United States digital currency policy upholds our values of privacy, individual sovereignty, and free market competitiveness.
So we referred to China just a little bit ago. So what is their digital yuan? The digital yuan, also known as the e-yuan, is a digital currency issued by the People's Bank of China. It is a digital equivalent of physical cash, enabling digital cash withdrawals, electronic transactions, and peer-to-peer transfers. As compared to existing electronic payment systems, it can create a government digital trail that follows the CBDCs wherever they go. The Chinese government has been vigorously promoting the digital yuan within China, where it's now available in 17 provinces and 26 cities, and has amassed over 260 million users. To drive adoption, local governments and state-owned enterprises have begun paying salaries in the digital yuan and even giving away small amounts of currency around holidays to spur consumers to try it out. What is their credit score? The China Social Credit System is a broad regulatory framework intended to report on the trustworthiness of individuals, corporations, and governmental entities across China. In this introduction, we explain what the China Social Credit System is, how it differs from financial credit ratings elsewhere, and how it impacts on individuals and companies operating within China. The goal of China Social Credit System is to provide a holistic assessment of an individual's or a company's trustworthiness. The China Social Credit System, while still in development, is arguably an extension of existing social rankings and ratings in China which have existed for millennia. The consequences of a poor social credit score could be serious. It may affect travel, prospects, employment, access to finance, and the ability to enter into contracts. On the other hand, a positive credit score could make a range of business transactions much easier. And in relation to social credit scores, the World Economic Forum has an idea.
We're developing through technology an ability for consumers to measure their own carbon footprint. What does that mean? That's where are they traveling? How are they traveling? What are they eating? What are they consuming on the platform? So individual carbon footprint tracker. Stay tuned. We don't have it operational yet, but this is something that we're working on.
So what if CBDC is adopted? What would that look like?
The important thing to understand is central bank digital currencies are not currencies. It's a financial transaction control grid, and it gives the ability for the central bankers, and they've said this publicly, the ability to not only set the rules centrally, but enforce the rules centrally. If you don't behave, you can have your money turned off.
These people do want total control and total surveillance. We're seeing versions of it already in China. And the vaccine passports are part of this process, and health passports. And we've seen, you're in Australia and you've made headlines about, banks going completely digital and not having cash on hand anymore, not giving out cash. It's crazy. There's a war on cash. There's a war on the individual. There's a war on your privacy.
I know what you're thinking. But wait a minute, hear me out. Let's listen to a more balanced view from Mike Saylor, He's the founder of MicroStrategy, a business intelligence and mobile software company.
I think that politically, the libertarians would like to see the former. They'd like to see cryptocurrency circulating with zero control and oversight. I think that the authoritarians would probably like to see the latter. They'd like to see the currency circulating with complete government oversight. I think that in the political world, there's a lot of resistance to the CBDC. I don't think that we'll find a majority of politicians in either the Democratic or the Republican Party that will support a complete CBDC. So I think that it's a non-starter on Capitol Hill. I think the Republicans would block it, but I think the Democrats would block it too. And I think ultimately the banking establishment won't want it either, because a CBDC would be an example of disintermediating all the banks.
All right, let's finish off with some data about the unbanked. That one of the problems that the CBDCs was going to fix was financial inclusion. However, if you look at this chart provided by the FDIC, we can see that the percentage of unbanked households in the U.S. has decreased every year from 2011 to 2021, from 8.2% to 4.5%. And then here is a poll on the trust in the government. So here is a Pew Research poll, the percentage of people who say they trust the U.S. government to do what is right. As you can see, the pinnacle around the mid-60s, a drastic drop below 30%. We have some variability. We see obviously when 9/11 happened, a spike, but has slowly declined even below around 20%. This says a lot about whether the Americans would trust their government with their finances. So is this just really a big hype to sell crypto coins? Are they going to jack up the gold and silver prices? If a financial crisis occurs tomorrow, do we pick up our assets and
For the hills! Run for the hills! Run for the hills!
Well, most of us don't have that option. What can you do for now? If you want to get away from the big institutions like Bank of America, you could look into joining a local credit union. We don't really know. The future is always hard to predict. Technology is developing at an incredible rate. We live in a digital world. An estimated 90% of all financial transactions are made by credit cards, debit cards, or mobile apps, i.e. Venmo, PayPal, Apple, etc. Will there be a cashless society? Probably. But our responsibility is to know who controls our money. Will it be a direct account to a central bank? Will the commercial banks still be around? More than likely, if CBDCs are adopted in the U.S., it would be a slow process. It may be that it will be a hybrid of CBDC, cash, and perhaps a crypto stablecoin. In the meantime, always use your critical thinking. Rational thought and careful examination is needed to negotiate this uncertain future. This is Shall We Consider. Thank you for watching. If you liked what you saw today, please hit the like button and subscribe.